Well, with respect to trends in the impact investing space, we have a big business in microfinance, and we're continuing to see asset flows into that microfinance business. We're primarily servicing clients in Switzerland and Europe with that opportunity, but we're able to work off of that business to try things like sustainable agribusiness, fair trade funds. Obviously a lot of activity in Europe right now, but in the United States we're experimenting with a few different types of ideas. We're very much in a R&D and innovation phase, and we think that the impact investing space generally is still in a very young state. So there is a lot of innovation going on, a lot of people trying different things. I don't think it's clear yet which products are going to, follow in the steps of microfinance and become the big impact investing product. I think maybe in a few years we'll begin to see what the market adopts. So for right now, we're trying a few different things, and we'll take that information on board.
At this point, most of the questions that we do receive are still in a very high-level general sphere. And so many of our clients simply ask, I've been reading a lot about impact investing. It interests me. What is it? What does it entail? How do I know if the impact investment is a valid one? So it's really more in defining the term still, and also how to vet opportunities intelligently. That's where we spend most of our time, which goes to show how it's still an emerging and dynamically growing space, but obviously not mature yet.
Well, we adopted the principles for responsible investment because European institutions were all asking about PRI in their RFPs, and if it wasn't an outright requirement, then it was clear that it was a criterion within their awarding asset management mandates. And as a competitiveness issue, we had to adopt PRI. We've been doing ESG at Credit Suisse for quite a while. And with the PRI commitment in place, it really gives added impetus to doing more. It's really been a catalyst for developing more ESG product. It creates more demand for ESG data and analytics within the firm. And in terms of where it's going, I think there's more analysis that shows top ESG performers are doing well. The financial performance is strong. And maybe it's an outperformance alpha case, or maybe it's a risk management beta case. But as more and more analysis piles up, it all seems to point in the same direction. Some of our clients are looking at that and saying, we think this needs to be integrated into the investment process for performance reasons. Mm-hmm. But right alongside of that, obviously, there are plenty of clients who have done negative screening, negative exclusion screening in their portfolios in years past, and now this is the next step. And so it's gaining, how do I say, familiarity and adoption within that space of activated investors.
I would say especially among our younger clients, the ESG factor is becoming more important, and even within the professional investing community, ESG is no longer seen as much of a defensive tool as much as an indicator of opportunity on the financial upside. So the same factors are now used in a different way. The lens is now being used on a more proactive level in identifying opportunity, and certainly that is how our younger millennial clients view this as well. A lot of our training still comes on a personal reverse inquiry issue, because there are always going to be a subset of relationship managers who spend more time and care about the space than others, and I'm sure that will continue to increase over time. So we have a number of white papers which we issue, and also primers on impact investing, and we basically use the opportunity to educate both clients and relationship managers at the same time through the same medium, whether it's through forums or written material.
And I think that curriculum will become more and more structured in the next year or two. Up to this point in time, the period with which we would do it was often flexible, but we'll probably make it more structured, more routine, more regular. Obviously, it's been focused in Europe in recent years. That's been the predominant area of training, but it'll begin to expand out to other geographies as well.